following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning on a happy Friday. It happens to be a options expiration, so keep in mind it has to be taken very, very seriously because you get some pretty good stuff. No more jokes, folks. That was it. You get one joke a year, and that happens to be it. The only reason I did that joke yesterday is that someone had heard me speak about 5 years ago, and they remembered that joke. It was in Frankfurt, Germany, and of course English is the second language there, and I told that joke, and they thought it was rather funny. Anyway, we'll just move on. As you can see here, we're taking a look at the DAX this morning, and as you can see, we've gone up and taken out that old high. We've completed a butterfly pattern in this area. So this has been, a much, much stronger market than our market. Our market is lagging badly. So compared to the rest of it, we'll get into that in just a little bit. But this is what the DAX is looking at. There's a lot of support in that 10,600 level. And believe me, this has nothing to do with anything with the relation to the news, too. So just keep in mind that when you watch these things, you've got to be able to see that they're getting ready to move. What really surprises me as we come into this Friday is the fact that the VIX index has backed off so much. Even with the market down, the VIX index doesn't like to go up. So maybe there's going to be some greater volatility soon, but we'll see what's going to happen. We are going to probably test that 2120 level in the S&P today. We'll cover that in just a little bit, but the first question that we've had this morning is related to Softy, Microsoft. John was talking about it earlier in the show. I wanted to just to give you an idea today, folks, that even though these patterns work, very, very well, they are far from perfect, and you've got to be able, to protect yourself when these things, don't act right. If you notice Microsoft here over the past year, we made that beautiful 1, 2, 3, 4, 5 expanding triangle that has the 3 drive to a top pattern in it. It has tremendous symmetry. The ratios were spot on. But after we made the high up there, back in August, the market really went nowhere. All it could back off was 2.5% from the high. And as you'll notice here, you had higher bottoms here over the last several weeks, and then you come into an earnings. And John Logan mentioned, and also Joey John mentioned that, is that John Joey or Joey John? I'm just teasing. Anyway, the lower part of this, in other words, as low as it could get, was just a 2.5% retracement over a 10-week period. So with earnings coming out, you don't want to mess with it. The only time you want to play earnings is if you do some type of a option play where your risk is absolutely known. That's the only way you can do it. Now we're trading at 60.75 in the Microsoft, and you can see that it's going to leave a monster gap. And if you look at the time during April, you'll see we left a monster gap then also. We filled that one. We have another gap between 54 and 56. That's one that hasn't been filled yet either, but they will be filled, but not necessarily right away. So this is one of the things that we wanted to cover this morning is, how these patterns work, and when they don't work, what you should do. Now, the next one I wanted to show you also was one that looks really beautiful. This is an absolute perfectly symmetrical head and shoulders pattern. And if you'll take a look at this happens to be the Canadian dollar. It stayed right at the 78% retracement. It's backed off a little bit from that level. And on this particular pattern, you know that if it makes a new high from that 132.60 level, that it is off to the races, because should it do that, it's going to complete another pattern that is even going to be more important. Now, let me just show you what happened to this thing this morning, because we had a report came out right during that time, and you'll notice that this is exactly what happened. The market, took off, and now what it's doing, it's going to go up and make a 3 drive to a top pattern up in this 133.60 level. That's what it looks like. Now, if you'll notice at the bottom here, which was just a few days ago when we were down at the 2 days ago, we were down at the 130 level, which is 10% from where we are now. But you'll notice that beautiful 3 drive to a bottom pattern. You had a beautiful ABCD structure. The symmetry was there. And the other thing that was interesting is we took out the low from September by 2 pips. And that's characteristic of foreign exchange markets, is they'll take old lows and old highs out by just a little bit and don't go anywhere. And that's not the function of someone searching for your stops. It's just a function of someone's looking at your the orders that are being filled by the foreign exchange banks are just, there happens to be some orders there, and that's all they're filled. That they have no reason to go looking for your stops. Believe me, they trade so much money in those foreign exchange markets that it's insignificant to what you're doing. Now, what many people do is they put their stops at old highs and lows, which is the wrong thing to do. I believe if you're going to put your stop near an old high or low, give it an extra $150 or $200 to make sure that it's got the power to take you out. So that's the main thing. If you remember 2 days ago when we were looking, I guess it was yesterday, we were looking at the gold at the 1276 level. We got to 1275.90. Missed it by 10 cents, and the market immediately backed off by $13 and held some relatively good support at that time. I wanted to bring that up to show you what's going on in that market as far as the gold market, because we had a very interesting pattern here. When you use some simple cycle work, which is nothing more. This was the cycle that you see on the bottom there, which is 116 hour. It's an hourly chart, so it's 116 bars. That's nothing more than a nominal cycle. This was a cycle that Jim Hurst talked about in his book, The Profit Magic of Stock Transaction Timing. A nominal cycle is one that fits perfectly with previous highs and lows, and also within the channel of what a market's doing. And as you'll notice, when the high was made up at that 1275.90, that was making a perfect 1.618 to the day's range between the 13th and 14th of October. So you had several ratios coming together. So that's why it had to break out above 1276 to be a valid breakout. Now what we've done is we've been able to make a correction, and this correction is very similar, i.e. exact, from the one that we had between the 13th and 14th of October. That one also dropped $15. So this is very important support we have now at the 1261 level in the gold, because anytime we get above 1276 and stay there for more than 10 minutes, I believe this market is pretty much ready to go. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we got a little announcement. Well, it's a big announcement. Bill Meridian, from Cycles Research in Vienna, Austria, is speaking at MIT. Most of you know that I went to MIT. I went there to have lunch when I met Basil. Anyway, he's going to be in room E51. Is that area 51? No, he's in building E51, room 395. That's building E51, room 395. You might want to go on to MIT's website and maybe check it out. But it's that's where you want. Building E51, room 395. So he is really entertaining. He's a super nice guy. So that's it's really. He just knows a lot of stuff, as we know from having him on a guest here. So just to keep that in mind. We've had some questions here about the E-mini S&P. We might as well get into that one because we're coming into some really important support down here, folks, at the 2122 level. That's about 3 handles from where we are right now. That's a 61% retracement of the move that we were looking at just recently. Here is where we were just the other day. Hold on, let's put this up so we can see it. There we go. I hope we can see it. Yeah, here's where we were when we were trading up at the 61% retracement here. Hold on a second here. Boy. All right, it's going to be a challenge. Bear with me here for 1 second, and then we will be fine. There we go. We got that part up. We got this part up, and then I'll have to put this like this. There we go. Now we'll get it up here. You'll notice here that we made a perfect 61% retracement from the high in September. That was during the Circus du Soleil on Wednesday. We got up to that 21.45. We're now trading down 20 handles, 21.25, but we're very, very close to some really good support down here at the 61% retracement, which comes in at 21.25. So, this market has been in a downtrend, but it's actually trying to hold up somewhat. But anything below 21.13, if we take those lows out from the 14th, which was that the low of the full moon, was that was the super full moon on the 13th and 14th. If we take that out at 21.09, your price targets are way down there. They're at 20.70 in change. So there's also that possibility that could be happening also. So pay close attention to three prices in the S&P. 21.22, which is a 61% retracement of the low for the full moon. That would be a very good, very, very good support at that point. And then also the 21.12 level, that would take out the lows of the day following the full moon. And then if we get below that, you could write down 2077 because that's most probably where it would be heading. Now, we've had some other weakness in some of these other indices that we look at, but this is the one that most people trade. So you want to, pay particular attention to those numbers. And these things really follow these number sequences pretty well. So you'll be able to see that. You'll see that you'll be able to, beat the market better if you follow some of these Fibonacci numbers. But boy, they are far from perfect. I can promise you that. But if you use it in conjunction with pattern recognition, you can certainly, gain some. Gain some experience, at least with your trading part. So those are the things that I think you want to pay attention. Remember, when we started this show, we showed you where some of these patterns failed. We showed the 135 pattern in the Microsoft. We showed you the pattern in the Canadian dollar. And you could go on and on and on. I know some of them work really good, but another thing is that when they don't work, you've got to be able to stand aside, and then you'll be pleasantly surprised that these do work in your favor. Let's get on to the U.S. dollar. We've had several questions about that. As you know, we've been very, very bullish. The dollar, i.e. bearish. The euro got below 109 today, got down to 108.80, I believe. And but you'll see here that we are now near the 98.80 level. We're only one handle away from the target up there at par at 100. So this thing does look like it wants to go higher. It couldn't back off at all for 10 days. This is a pattern that really tells you that this thing is really getting ready to pick up speed. I mean, when a market does not have any selling coming into it, that just means there's a whole lot of buying, and the pressure there is like a giant pressure cooker, and it looks like it wants to, reach these levels. So remember, that can be a very, very important thing when you see something like that happen. I wanted to show you the same type of a chart that we were very bullish on, mainly because of our good friend Mr. Z in the room, and that has been the natural gas. And if you remember, just a week or so ago, we were having this situation where we were having higher bottoms all along, all during the August, September, October period. And as you can see, we went up and made a 1.618 expansion of that one. And then, it was backing off, back into its normal bottom. Now, if we get below 296 per cubic feet, then you've got a chance of this being, a super major top coming in here. But right now, this is just in really nice trend channels, backing off 61% on. In fact, that's what we have going on right now, is backing off 61% of the previous high. That's all it is. So it's not doing anything. What we call is too much. The natural gas has a tendency, they're joking about it in the Tiger Den here today, it does have a tendency to get a little bit hyperactive sometimes, but most of the time it's pretty easily traded. The contract value is good, so you don't have to risk an arm and a leg, and so you'll be able to see what's going on. There's some chatter on the internet, about the fact that the coming collapse of the U.S. dollar and the one world currency and stuff like that. Folks, I just trade the charts. If you start listening to that stuff, you might as well, listen to the rhetoric that goes on during the political discussions and stuff, because, everybody has an opinion. And you're the one that has to decide whether you're going to make a trade or not. And the only thing you can do when you do that is to protect yourself, because nobody knows whether they're going to win or not. And the second part of it is no one knows, how much money you're going to make on a trade. So the only thing you can control in the risk-reward equation is the risk. So focus on that. That's the thing that you want to keep in mind. How much money do I have to risk when I put the trade on is going to be far better than saying, oh, wow, if I buy it here, I'll make X number of dollars. This is how stockbrokers have worked, and they still do it to this day, is that you put your money into the whatever XYZ fund, and at the end of 5 years, you're going to have XYZ percentage, and they don't know that. So just keep in mind that it's all about probabilities, and it's mostly about risk control, because risk control will take you to the promised land. You don't want to think about how much money you're going to make, because that's a very dangerous situation. 877-927-6648.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the live cattle market. primarily because of the pattern that we have going on in the cattle market. What I'd like for you to do is to look at the pattern during the move down into July, and then you'll see we had a really nice 2-week rally into August. Then the market broke really badly. We had Rich Anderson on the show trading around that 115 level, and he was warning us that prices were headed lower, and of course they did drop better than 16 cents a pound. Then you'll notice that after that bottom was in, we made a perfectly symmetrical move that we did during July. It was in time and price. It took 10 trading days to get there, hitting the exact price, which happened to be a 61% retracement off of the August high, and that set up this parallel channel that happens to be in vogue right now. Then after that time, what did we do? We broke another 13 cents to the downside and completed this bottom that we were looking at just recently at this 96.5, 97 level. And then yesterday, cattle went limit bid. In other words, there were more buyers than there were sellers, so the prices were locked at limit. So usually when you see a limit up move like this, you're going to see a little bit of follow through early in the morning on the day following, but whether that continues from that level or not, who knows? But as you can see, if it follows this parallel channel that we're looking at, we could be looking at $1.04 in the cattle, which is 4 cents higher. Now, if they went limit up today, which is 3 cents, they would hit 103. And if it did that, that's telling you that this thing really wants to go, because when they come out of these bottoms very, very strong, like we did during July and September, they're usually going to run about 10 cents. So the area you want to be looking at would be the 105, 106 level in the cattle if we do get that type of range. Now, we talked about hogs at the beginning of the week when they were trading at 42. They closed at 4.35 per pound. That's a full 3 cents under the cost of production. Open interest is starting to drop in hogs. In other words, prices are going down. Open interest is decreasing. That's a sign of people exiting the market. That's a very bullish sign when a market has that happen. So if you have a drop in open interest and dropping prices, that's a sign the market is ready to go up. It's basically like you pull a bob underneath the water, and when you release it, the bob pops up. It's the same type of thing. So keep an eye on these hogs, because this could be a really big long-term move. I'm not involved in hogs at the present time, but we are looking at those, for potential buying. And they have some really good volume, folks. I mean, it's just a little under what we trade for cattle. So it's, it's not big for the super, big guys, but this is what you want to keep an eye on. I think, you want to be looking at, I would say April hogs. February is okay, but April is really the big month. It's like the November soybeans or the hog market. Why, I don't know, but April is a very good month to look at. Now, April hogs are trading, I believe they're trading 10, 11 cents higher than we have in the December, because they've already flattened. They've already came out and decided that this thing is going to turn. It's just a matter of when. So they're already factoring that into the futures market, and that's why they call it a futures market. So watch this hog move. We'll be talking about it more often, and we will have Rich Anderson on next week. He's just got back from the convention in the debates in Las Vegas late last night, so he can't be on today, but we'll have him on early next week, and we'll be talking about hogs and also corn, soybeans, and wheat, because wheat is another one that we need to chat about, because this is one that if you like cycles and things, and we do talk a little bit about lunar cycles and things like that are very important. But if we watch this wheat here over the past couple of months, and we'll go back from September, to where we are right now. What I wanted to do is to go through several lunar cycles. If you look at the bottom of the chart, you'll see these little red circle that is white in the middle. That is a full moon. And then if you look at the one on October the 30th, the little red dot, that's a new moon. This is a cycle what do you call it? It's a tool. It's a cycle tool that shows you where the lunar cycles are. And then it shows the moon nodes also, which are, 7 days, 7 to 10 days from those levels. So, and all I do is I try to match up those cycles to where the prices are. And if you'll notice, when we had the full moon on the 14th, we had a beautiful retracement up there. We had an ABCD pattern, a beautiful butterfly forming at the 429, and of course, wheat dropped 17 cents. And now we've got a really good setup potentially in wheat to come down to this 409 level, down about 8 cents from where we are right now. This is a really good one. And the reason why this is so important is we've already broken to the upside, and now you're pulling back to see if you're going to, to hold this level. So keep a really close eye on this 408, 409 level in Christmas wheat, because it's got a really good chance here to be bullish. And we're seeing the same situation in corn. Corn was bearish up at that 358 level, now trading at 350. We're going to have some pretty good support at 340 in Christmas corn too. So we want to watch these because they're coming, getting close to these levels that we like to look at. And the good part about this is that, you add this to, what you're looking at with the cycles, it gives you a little bit of an edge. And remember, these are all things that are based on probabilities. They're nothing that, is etched in stone. So keep that in mind. Okay, we're opening up here in the market today, and we're heading down. We almost got to that 2122 level in the S&P. We've had a pretty good move down here. So as we know, we don't want to usually trade right during what we call amateur hour, which is this first hour. But on patterns like this, if you buy it at that 2122 level, your risk there is about, at the very most, would be 5 points, which is a certainly acceptable $250 risk. But it's probably better to wait, at least 15 minutes to see if it's going to hold. However, if you believe in patterns and ratios, you can buy it at 2122 and risk only 3 points, and that reduces your risk. And if you're right, it's going to turn at that point. So we'll see if this is going to happen. But anything below 2109 is the real key level, because we break below that. That means we've broken the low of the full moon day, which was the 13th, actually, the day Norm Winsky pointed it out. Bill Meridian was looking for the 14th. That would tell us that this cycle has failed, and, we're getting ready to go a lot lower. But as long as that doesn't happen, be able to, to trade it from the long side. Right now we're trading at 2125 here in the E-mini S&P. The 786 on this move, folks, is 2117. So the difference between 2122, 2117 is, of course, 5 points. So there's where your stop goes. It's right below 2117 if you buy it at 2122. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks. We want to take a look at this crude oil chart here that we're going to be looking at. This is over the past 3 weeks. As you can see here, we made a butterfly pattern up at the top. The one thing that I wanted to point out is the fact that how we took this out. You know, the old high had been 51.70. We got up to 50, almost exactly 52, just missed it by a few ticks. But look how quickly it gave it back. I mean, you know, all that was people thinking it was going to be a breakout. We were taking out the highs from September at that time, and it really didn't go anywhere. So be really careful when you see these breakouts, because when they fail, you know, they can fail very badly. And as you can see here, we have some support coming in here at this 50.30, which is the low on the day so far. But anything below that would set up a fact that we're probably going to go a lot lower. And the reason why you say that on this hourly chart, all you did was make a 382 retracement this morning, and that would take it, far, far lower, and probably even breaking below the 49 level if, in fact, we do start to weaken up. The fact that we're having this big move in the U.S. dollar versus the Canadian bodes well for lower oil prices, right? Because as Canada weakens up, that means that because they're such a big oil exporter, that hurts their currency. So watch that as we go through some of these charts as we're watching them. Someone keeps asking me about the gold market, folks. I can say no more than the chart that I put there a little while ago, and that is that we have some pretty good support at that 1261 level. That was the equal move down from the last move. They were both $15. Usually the move in gold is 17. That's the 1/2 of the harmonic number of 34 in gold. And so I would suggest that, as long as it stays above this 1261 level, it's got a chance to rally. Now, we're trading at 1267 right now, so you're going to have to risk about $7 or $8 to see if you want to enter this trade, at least if you were to buy it right now. I'm telling you this because, remember that the only thing we can control is the risk. I don't know where this market's going. I have some ideas and opinions, but that's what they are. They're ideas and opinions. We don't know what they're going to do. So keep in mind that all of the things that we talk about here on my program at TFNN, and the other guys are the same, I'm sure, that is that we're giving you ideas, but you have to take the responsibility for it to put the trades on. And some of them work, some of them don't. But if you put them all on, you're going to do okay, because the odds are in your favor of being successful if you follow some of these patterns, because they do have a positive expectation over a negative expectation. But the key word there is expectation. Now, here's where we stand right now, folks. We are been looking at this Bradley model for quite some time. I wanted to go over and talk about it one more time here. As you can see here, we're starting to, we did break below the that little pennant that we had. We rallied back above it. Now we're testing it again. So if we can get the Dow below 18,100, that would be a sign that, yes, we are getting ready to move to the downside and then head lower for the next couple of months. Whether that occurs or not remains to be seen, because, we could easily break out to the upside. You can see what's happened to the DAX. Even though it hasn't broken in, to the upside, it's been in a higher level trading range than we've had here in the S&P. So keep in mind that those are the things that you want to be watching at it. Look now. So if the Dow is the Dow trading at 18,063 already? I didn't realize it already got below there. I thought that was the futures. Well, let's just double check it. Unfortunately, I don't have that data in front of me right now, but we'll watch it very closely here to see what's happening. Can someone tell me where the Dow Jones is trading, please, here in the den, just so I can double check it? Because if I try to get out and check the data, I'll probably lose connection or hit the wrong button, and I don't want to do that. So that's a key factor to keep in mind. So we'll watch that. Okay, we're trading below 18,100. It means we've broken below that point again, and we are heading down. And if we break below the low of that the full moon on the 13th, which was a super full moon when perigee was as close to the moon's close to the Earth as it can be, that's a very bearish scenario, folks. I remember this day, this third week of October, 1987, that was October the 16th. Options expired on that day. We had the 17th, Saturday, 18th was Sunday, and the 19th, we wrote history as the Dow was down 16% in one day. So that's a pretty big move. Yes, the ABCD structure on that Dow Jones pattern that we just posted in there comes in at 17,597, so that's 600 points away. That's it. One other thing from historical purposes that I can almost, I can't guarantee anything, but really high probability. Folks, the biggest move down we've had in the past 7 or 8 months in the Dow Jones has been 400 points. That was back in September sometime, I believe. What we do know from history is when the market expands to the downside, it's going to expand by 1.618. We saw this many times, but during the 1987 move, you could set your watch by it. But if we take 400 and multiply it times 1.618, we're going to get right at 700. So that's what's going to be the big down move. Whenever this market does go down, you'll see it down 700 points in the Dow Jones, and that's nothing more than the 1.618. To prove this to yourself, go back to 2008. The biggest down move we had was 777. That's when Hank Paulson came out and said, "Oh, the banks are going to die. The banks are going to die." And what do? They bailed them all out. And but that was the down day. So the biggest up day we had in the Dow was 888. So remember, 400 times 1.618 takes you down to this level of 700 in the Dow on one day. I'm just talking about in one day it should be down 700 points, and that's not a lot. You're talking you're talking about 3.5% or so. So it's not a big deal. It is if you're long. It's also if you're short. But watch it anyway to see if the flash crash was different. That I believe was a algorithmic trading or high frequency trading triggered, but because many of those trades, they disallowed because some of those stocks, like JP Morgan and some of those stocks dropped 25-30%. They didn't honor those trades. So that the flash crash is just what they call it, is flash. So just watch that. It really, this is part of the problem we have, folks, with this electronic stuff. And, that's one of the big things that, these hackers, if they ever get into this system, this would really cause havoc. That would be cyber warfare at the highest level, because you'd be shutting down the economy, and therein is the real problem. Thomas Jefferson said, "You can have the standing armies, let me have control of your money supply. So we want to keep in mind that we got to be careful of the cyber attacks. But at least now we know that they're out there and that people are doing certain things. We don't know if in fact these are the people doing it, but we know somebody's doing it. So there's some really smart people out there. I would hire those folks to build a safe system so that they'd be able to do it. I believe that Microsoft has a standing offer of $100,000 if they can hack into any one of their systems. And they never tell you whether they're successful or not. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the market has bounced off. We just missed the number in the S&P. We were looking for 21.22. We got to 21.23. If you got the memo that said to shade it by a point, then good for you. And if you didn't, we still have 3 shares of the Brooklyn Bridge that are available. They're gone. Sorry, we're sold out. Anyway, let's keep our eye on the ball here, folks, because the market still has a bullish undertone to it. I don't know if it's related to quantitative easing or whatever is going on over there at the Fed, but interest rates seem to be going higher. We're having a little bit of a bounce in the bonds. folks, the number to watch in the bonds, we're about a half a point away, a little less than a half a point, but 165.13. That would take out the old high. So this would be one of those situations where the market would go up and, hit that level and maybe look like it's going to run to the moon. And if it doesn't, that's where you want to take a shot at being short at that 165.13. But let it get there and see if there's any buying, once it hits that level. Because if it does that, then you've got a chance to, really make a really big move to the downside. So those are some of the things that we're watching today. But the bonds look very, very interesting. And I believe they've got a chance to do something, pretty spectacular to the downside here if we don't get any higher than that 166 level. So the key level for me to watch in the bonds is 165.13. Gold, we did make a bottom. It looks like we did based on the cycle work and the ratios and stuff at 1261, but below 1261 is going to set up another $15 move to the downside, and it's going to take it down to the 61% retracement of this whole move, which would take you into the 1247 level, and you'd want to be 1249 level in the gold. So that's another one that you want to watch very closely. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.